All right, so a lot of stuff happened over this past weekend. There was a sale. There was a dip in crypto. You want to talk to us about that?
Yeah. So the crypto dip over the weekend, when price action happens across markets, you got to look behind the curtain to see what's really going on. So crypto is more volatile than stocks. And this is typically because there's not as much money in crypto. It's harder to move prices when there's a bunch of money in an asset. So, for example, Apple's stock is going to be harder to move than a smaller stock because if I own, let's say I own like 5% of a coin on Rally. If I myself pull out of that coin, then the price is down by 5%. That's one person. So let's take that to if there's 10 times the money in that coin, then I obviously own a much smaller percentage. So when I pull out, it's not as big a drop because there's more money in it.
Right.
All right. So it's harder to move bigger assets. Crypto does not have the same market cap, meaning the total market capitalization, like all the money, like if you took all the supply, like if there's, just for number's sake, if there's 1 million Bitcoin out there, that would be the total supply. So if you take the total supply times the price of the asset, like if Bitcoin's $1,000 per Bitcoin, and you have a million of them, you take the million times 1,000, and that's the total market cap, market capitalization. All right, so crypto market cap is like maybe 2 trillion, 2.5 trillion, 3 trillion. The stock market, like all the market cap of the stock market is probably like 25 times that.
Crazy.
So it's a much bigger market for the stock market, and that is why crypto is easier to move right now because there's not as much money in it. So while it may be harder to move Bitcoin than some smaller coins, it's still like Bitcoin in comparison to Apple or Microsoft is still half the size of Apple or Microsoft. All right. So that's why money moves and prices dip and whatnot. And why musicians need to know this is because, like, as we see, all these NFT projects are coming out. Like, people are moving this way, whether you like it or not.
Right.
And we definitely have not seen enough artists take hold of this, especially like the indie artists. I think indie artists can really come up off this if you can't wait until major artists do stuff. You have to go do it before them, and that's when you can put yourself in position to get some of these really great gains and be innovative and set up new companies and all this stuff. So when a dip happens, that is typically not a time to be scared. One, obviously none of this is financial advice, just for education purposes only and entertainment, but don't chase after high prices. So whenever you see the prices low is actually, and you believe in the project, that is usually a very good sign to go in. So if, let's say, in March 2020, everybody started to freak out because big hedge funds borrow lots of money. So whenever they are highly leveraged and they see prices starting to drop, they will pull out their money.
Right.
Because they cannot take that chance of losing all this money for all their clients, and they are the ones really moving those prices like that. It's not like the average person with their 401k moving the prices like that.
Right.
It's people who borrowed a ton of money and they're trying to save their assets. So for artists, whenever you start to see these huge dips in companies that are still legit or crypto projects that are legit, that is typically a time to at least put some in.
Yes.
It doesn't have to be your life savings. We're not saying to go do that, but put something in there.
Yeah.
Because eventually, if it's a good project, it's a good company, a good concept, it's going to bounce back eventually.
Right.
Now, last year, it bounced back very quickly because they printed the money very quickly last year. They printed, it was 20% of the total supply of money that's ever been printed. They printed last year. I don't see them doing that again in case there's they say this variant, that variant, and all that other stuff, right? But I don't see them doing that to that scale again. Mm-hmm. So if anything, it might bounce back down to the level it was before the 2020 crash, maybe a little bit below that. But look, if it drops lower than that, by all means, get good companies that if you use a product that's pretty much it's a safer sign. Like, hey, I use Samsung. Well, Samsung's not on the United States stock market, but if it were, I'd be like, okay, I use a lot of Samsung products. Right. I like the direction they're heading in. That's usually a safe one. I use Apple products. That was obviously I don't. But if you do use Apple products, it would be, I use these, or I wear Nikes, or like all this other stuff. See if they're public, and then when you see them dip down a good bit, and you still see them innovating, like Nike's doing all these NFTs and stuff. Look, they're probably going to be in pretty prime position. Yeah. So putting some in there, like, don't put all your eggs in one basket. Spread out your money to the ones that all the ones you like. Right. You're kind of creating your own mutual fund, or not your own mutual fund. You're creating your own exchange traded fund, your ETF, and that way, like, this is a sale for people who are used to stocks and crypto and whatnot. Especially the retail investor. So the hedge funds, they pull out at that high point to preserve their capital. The retail investor, you shouldn't be buying high in the first place. So you bought in low, and then you're waiting for another dip down to buy in again. You don't chase after high prices. Right. So when you guys start to have your own NFTs and your own coins, and you're buying other people's and all this, and this new music economy pops off, like we've been telling you about, you will know how to navigate it. Don't chase. Don't let your emotions get to you. Yep. Just stay calm. Wait for that one that you like to drop real low. Scoop some up. Just chill on it. You don't have to sell it off after you get up 20% and 10%. Like, just chill. Yeah. And especially with rally, like if you get a good creator at a good spot, just chill on it. Yeah. And you get rewards with rally. They'll literally pay you to hold it. 100%. So this is a sale. Oh yeah. As it dips down lower, just so you guys know what I'm doing. I am placing different orders at different spots. So if it dips down one level, buy in a little bit. If it dips down even more, maybe I buy a bit more, so on and so forth. Right. As it goes down the pricing tier. So you can set orders. They're called limit orders. Yeah. You're not going to see that on Coinbase.com. You're going to see it on pro.coinbase.com. Yeah. All right. So you go to pro.coinbase.com to buy your crypto. You can do TD Ameritrade for your stocks or your options. If you want to do that type of stuff, obviously we talk more about crypto, but our Coinbase link will be in the description. Yeah. Go to pro.coinbase.com. You can set something called a limit order. Maybe we'll do a video in the future about what a limit order is. It's getting more on the crypto side than the music side, but I think it still will be helpful, especially as these fields just merge as they're doing very rapidly right now.
100%. Sounds good.